Thank you for joining me. I'm Juan, lead trader and founder of ProsperiTrade. In this video, I'm going to discuss MRIN, what caused the spike, and how would I play it if I was going to day trade it tomorrow. You're going to want to stand by for this video. So recently, MRIN filed an 8K, which is also known as a current report, and it is something they have to file with the SEC to announce any major events that shareholders should know about. Anything that's going to affect the company, the shareholders have to know, and the SEC requires all these companies to file 8K. So an 8K came out today, and MRIN in the 8K stated that MRIN Software, the company, entered into a revenue share agreement with Google. So that's what caused the major spike. Anytime day traders see a small company like MRIN enter into an agreement with a major company like Google, as soon as those words are triggered, agreement with such a major company, it's going to cause a major spike. If you look at the past chart of MRIN, they have had major spikes. If you're a day trader, this is not for investors. You're not going to look at MRIN and look at its financials, and we're going to go over the financials and say, oh, this is a company I want to invest long term. This is very speculative. This is strictly for day traders. This is something that day traders look for. They look for companies that had previous spikes. Now, what caused this previous spike? They entered into an agreement with Instacart. Instacart started supporting their software. This is a SaaS program, SaaS software program, and it caused the company to spike from 276 all the way to a high of 2713. So is it possible that this is going to happen for this company? It's very possible. One of the reasons it's possible, one of the reasons this company spikes is because of the float. Look at the float. So we discussed the float and the shares outstanding. It's basically the shares available for traders to buy and sell. Just to give you a comparison, this company here, their float is 9 million. Let's look at Bank of America. Bank of America's float is 8 billion. So if you look at the daily chart, they don't have major spikes. You see here, it went from 37 to 43 over time, to 36 to 42. But this is in days and months and months. This is over the past year. There's 8 billion shares circulating. So you would have to have billions of shares purchased and sold for it to cause a spike. As opposed to MRIN, we get major volume. You see all the volume here, thousands and thousands of shares. You have hundreds of thousands of traders buying this stock, and there's only 9 million shares circulating. Like everything else, buy and sell, this company becomes more expensive because there's no shares available, and the float keeps rotating, and that's what causes these spikes. This has the potential to be another spiker. So I did a video, and you can find it on YouTube, on RKLB. I was just doing a tutorial on day trading, and I wanted to record a day trade, and when I was recording this video, I didn't know if I was going to find a stock to trade, and regardless if I found one or not, I just wanted to have a lesson about day trading. Well, if you watch the video, I found the stock to trade. It came up on my scanner. I traded it. It was a successful trade. I did what I wanted to do. The stock was RKLB. I caught it during this day, during this big spike. I traded it in here, and it ended up going all the way to 21. But I caught a small piece of it. And if you see in the comments, this person here said, how are those paper hands feeling right now? How are we doing, RKBL? See you at $30 tomorrow. This train of thought, this mentality is what burns over 90-something% of day traders. And I used to be the same way. I used to want to find that supernova and always want to and have that FOMO if I missed out on anything. And I used to lose money when I first started day trading until I got over it and said, you know what, I'm going to be consistent, because consistency leads to profits at the end of the year. If you take this guy that said I had paper hands, compare what his yearly returns are, I almost guarantee you, I don't know this guy, but I'm pretty confident that if this is his mentality, by the end of the year, he's lost money. Because what he's saying basically is, if you have a trade like this that happens 100 times, maybe out of those 100, 5 of them will keep going to that $30, $40, or whatever he thinks, to the moon. Maybe 5 out of the 100. But if you take the approach of taking profit in areas where it's going to hit resistance, where you expect it not to break certain resistance, past resistance, start taking profit, start taking small profit. if you want to hold it, at least take some profit. So if it drops, you're still in the green. And that's the name of the game, to get gains every day, because at the end of the year, it accumulates. It's about trading consistently and putting yourself in position to be successful and picking the trades that have the best probability. That's why when I get into certain trades, I talk about the risk. I talk about where to take your exit if the company drops, not to hold on. So if we look at RKLB, this is the day I traded it. It went as high as 21, and he told me I had paper hands and to hold on, that tomorrow is going to be at 30. But you see a drop, and now it's all the way down to 14. This is what happens a lot of time. So back to MRIN. What exactly does it mean to have a revenue share agreement? So first of all, with revenue share agreement, there's some controversy with it, but we're going to describe exactly what revenue share agreement is. So what is revenue sharing agreement? So basically you have the advertiser, they spend money, they use a software like MRIN, which helps optimize whatever they're trying to advertise, get it across platforms, and try to give them their best bang for their buck with their SaaS programs and advertising. So they advertise in anything on Google, and it's basically a rebate for using Google. Where the conflict comes sometimes is that it can be designed to encourage agencies to spend more on their clients' advertisement budgets, and these rebates could amount to, let's say, 5% of their advertising spend. Some think that it's justifiable discount for these bulk purchases, and they did a study in 2016, the ANA, that shows some of these agencies typically keep the rebates for themselves and don't pass it on to their clients. So some people label this as a kickback from Google and state that it may not be fair for rival advertisers. And also, just to be clear, that in December 17th of 2008, Google already had an agreement. They entered a 3-year revenue sharing agreement. So this is not the first time. This is not something new. So MRIN, they do address the rebates, and they state that they're going to use that money to improve the company, to improve the technology, to just advance the company and make their software better for the user. So here on their website, they state what they do, and it's basically what we stated, that they're a SaaS program. Their software offers a unified SaaS ad management platform for search, social, and e-commerce advertising. We help digital marketers convert precious audience, improve financial performance, and make better decisions. They're out in San Francisco. They went public in March 22, 2013. So let's take a look at their financials. So if we look at their income, 2011, 36 million, 59 million, 77, 99, 100, 99, 75, and 58. So during this time, they went into a Google agreement and they've been on a decline. 58 million in revenue, 49 million, 38 million, down to 26 million in revenue. Their gross profit has been dropping. Operating income, negative for the last decade. Total assets, 30 million. And total liabilities, 15 million. They've increased their shares outstanding. And this is something else. You see here, they've had 285 employees, 424, 500, 571, 511, 430, 290, 229. And now 162. I mean, those aren't great signs of a growing company where they've lost more than half their workforce. Overall, just not impressive numbers to invest long term. That's why I say this is purely a day trade. Now, I'm not going to day trade it. I'm going to watch, but I will go over and look at their chart and give you my opinion, what I think is going to happen tomorrow. And I'm going to base that off of what usually happens and give you some advice of how to day trade it if you are going to day trade. So first, if you're going to day trade, you want to get a big overview of how it's done over a long period of time. Usually I start off with the monthly and kind of look back, look how far it's gone. It used to be all the way up here, 130, just to see if there's anywhere where it bounced in the past. And if it's usually something like this, then I'll go to the weekly and kind of see if there's been support anywhere or resistance. And here's one. So it went all the way up to 12 here. So $12 may be a possibility. You see here in 2019, it hit 12.12. And here it also spiked up to the 12 area. And both times you see the wick, it spikes up, hits that 12, and then it retraces. and it's just never recovered from that. So 12 would be one area. Then I'll go to the daily chart and I'll look at here. Okay, so this is the one we saw long term. We said 1195, 942. It's already broken this. So 12 would be kind of a concern to me. So 12 is something I would want to keep an eye on as possible resistance. Then here, this little gap here, if it breaks 12, sometimes it fills that gap a lot of times, the 1263. And then really after that, it's kind of like a guessing game. You can go back to the weekly, kind of see, you know, it's not much there. Monthly, it's really hard to tell here just because it's just been on such a decline. It doesn't look like it's bounced in a lot of other places. If I was going to day trade it, I would want to see it hit that 12 and definitely take a portion of profit. That would be a big target for me. Take a portion of profit, then hold on to it there. It's probably going to pull back. And if it breaks that, then you just hold on and you're already in the green, and that's the best way to approach it. So let's look at the daily chart. What I did is I set up a Fibonacci retracement from where it started to spike to the peak here. I put a yellow resistance line here to show you that this is where it hit a few times and it needs to break this 1054. I've shown here where there's some support, 940. Usually, what happens a lot of times in the morning, at 4 in the morning, people are going to be waiting to trade this, and it may spike and then sell off. So when it sells off, if you're going to trade it pre-market, I would wait to see it possibly bounce off of 940. And if it 940 doesn't hold, these two areas are going to be very important, between 874 and 814. If you can get it anywhere in here, that would be your best bet. Because if you get it somewhere in here in the retracement, 50% retracement, if it breaks 818, then I would just get out and take a loss. I mean, it can keep going down and then recover, but that's how I would play it. If you want to be more conservative and not trade it pre-market, then wait till the bell opens. And I would wait for what they call a pre-market breakout. So let's say this stock opens up at 4 in the morning, spikes up, then sells off. And let's say it sells off all the way down here. What I would do if I wanted to trade it when the bell's going to open, I would see where it bounced off support and resistance. So let's say it dropped all the way to $7 and it was kind of forming a channel between 7 and 750, just like this, bouncing off of 7, hitting 750, bouncing out of 7, hitting 750. Then I would watch it when the bell opens. If it drops, that's fine. And if it starts to recover and get back in this channel, then my entry would be the 750 where it was hitting resistance. And your stop loss would be, I would say if you get in at 750 and it was bouncing off of down here like 7 or 675, somewhere maybe in the middle. Because sometimes what it does, if it breaks your pre-market breakout, goes up about 30 cents, 20 cents, then it drops just below it a little bit, then it goes back up. So if it breaks it, I would say that would be your entry. Your exit would be if it somewhere in the middle, if it starts to drop below that, then just take your loss and then hold on to see if it's going to continue to go up. If it continues to go up, then you have to kind of make where past resistance was. So if you were here and it breaks 750, then here, support here is going to become resistance most likely. So you may want to take some profit in this area. And then that way, if you take some profit, you can hold on to the rest and see if it's going to continue to go up. And if it drops quickly, then you get out and you're still green because you sold part of your profit. I can't say what's going to happen 100%, but it seems like there's a lot of hype in this news. It's a very low float stock. So it's, you know, with a small amount of people can cause this movement, can cause a lot of spike, can cause a lot of movement. So I would say set your support and resistance lines. If you're going to trade it at 4 in the morning, then don't get too greedy. There may be a spike. Something with this kind of low float, usually there's an initial spike and then it starts to sell off. The safest bet, because it's a guessing game at 4 in the morning, I'll tell you what happens the majority of the time. A good amount of time, stocks with this type of low float and this type of hype usually have a quick spike, then a drop off. If it's larger floats, if it's not as much hype, usually all these people that took these positions, they want to take profits and they take profit at 4 in the morning. But ultimately, it's a theory, it's a guessing game. It's a thesis based off of past performance, based off of a decade of trading experience. I could still be wrong. I'm not touching it at 4 in the morning. It's because it is a guessing game. To me, the safest thing is to let everything pre-market happen and watch it form some sort of channel. watch it form a channel of support and resistance, and then play the pre-market breakout. I've been trading for over a decade, and I used to journal every trade I did, and usually stocks like this have the highest probability when you play the pre-market breakout. Everything else is a bigger guess with less likelihood of success. I'm not saying you can't be successful. I'm just telling you what's going to put you in the best position to be successful. These things can go crazy. I would watch it pre-market, watch the, set the Fibonacci retracement, watch it form a channel, and then as soon as it breaks out of that channel, when the bell rings, then you take your position and hold on to it. And if it breaks below the entry point, give it a little bit time to work, but have your stop loss. Like we mentioned, you have to have a stop loss. And if it holds and it starts to spike up, then take profit at that, at previous resistance, that $9 or $12 or wherever it's trading at the time. Have these areas set. So just be careful. Don't go in with major expectations to get rich. Don't have the attitude of paper hands like the other guy. Just take some profit, be green, and every day that you can be green, you're successful. And if you can do that the majority of the time, your profits will accumulate. You don't have to make all your profits in one day. Don't have that mentality. That's the mentality that gets a lot of day traders in trouble. I've been working with day traders for years in major platforms, and the majority of them, you can pick the biggest platform that we all know, that we all see advertising for. The majority of these day traders at the end of the year, they're not profitable because they get too excited, they get FOMO. So have your game plan, be happy with some profit, and you may take your profit at that 12 where there was resistance and you made $800 and you're happy. Then you watch that stock go to $80 and you say, man, I hate this guy, I should have not listened to him. Well, like we said, if you have that mentality and you want to wait for that $100, $90, $50, and you try that 100 times, you're only going to be right 5 times, maybe 6 times. And that 6 times is not going to bring you within the green at the end of the year compared to the other 90 losses that you had. So be consistent, take your profits, don't try to get rich in one trade, and hopefully you'll be okay. Thank you for joining me. If you liked the video, please subscribe, comment, and like, and see you on the next video.